Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. Shares of Coinbase have been on a wild ride since coming public, peaking well over $300 per share, only to fall to near $30 per share at the start of January 2023. But the stock has recovered slightly, and I think one of the reasons that is investors are getting more bullish on some of the underlying strength at Coinbase. I want to go into 3 reasons that I think that Coinbase is actually a good long-term investment. It may be a little bit of a rocky ride over the next couple of years, but things are playing out pretty well for the company, and we will see progress on that when it reports earnings on February 21st. I'm Travis Hoium. Thank you for watching Riiv Investing. Please subscribe here on YouTube. Give this video a like and share it with anybody you think would be interested. Let's go through the 3 reasons that I like Coinbase stock right now. One is that this is one of the leading crypto exchanges in the world, and the company's position got even better in November when FTX collapsed. Now, that was a really devastating collapse for the crypto market, but from a business perspective, it really showed that Coinbase is the adults in the room when it comes to crypto. It didn't incur any major losses because of FTX, and it's been reporting SEC filings that are audited to the public, something that its biggest competitor, Binance, doesn't do. You can see the company's market share here is not anywhere close to what Binance is, but it is a leader in mature markets like the US. And like I said, this is a company that has audited financial statements. Binance couldn't even pass what it was calling an audit, which was really just a check of the assets on its balance sheet. And the company doing that check quit on Binance after that was done. So we don't really know a lot about Binance. It's a very opaque company, just like FTX was. So I think that's a red flag there. I really like where Coinbase is from a positioning standpoint and its history as a reliable player in the exchange business. And that's related to the second point of strength that I want to highlight, and that is Ethereum staking. You might remember in the fall that Ethereum moved from proof of work to proof of stake. Well, most investors, specifically institutional investors, who want to stake Ethereum don't have the ability to do it themselves, so they rely on third parties like Coinbase. According to this chart right here, Coinbase has about a 15% market share in the staked Ethereum market right now. That will be a big additional source of revenue that didn't exist in the third quarter or before that. So this is a new revenue stream for Coinbase. What they do is they give 75% of the staking rewards to the customers that are staking their Ethereum, and 25% is kept by Coinbase in a form of revenue. Now, we don't exactly know what these numbers are going to look like until they report fourth quarter earnings, but I think this could add tens of millions of dollars in revenue per quarter for Coinbase. And like I said, will be an incremental new revenue stream that didn't exist just a quarter ago. The third reason to like Coinbase is its 50-50 ownership of the USDC token. USDC is run by the Center Consortium, which is 50% owned by Circle and 50% owned by Coinbase. The US dollar assets that back the token can then be invested in interest-bearing securities like treasuries. So as interest rates have gone up over the last year, that means that the Center Consortium is spitting off more and more cash. You can see that here in Coinbase's income statement under interest income. $8.4 million a year ago from the third quarter of 2021. By the third quarter of 2022, $101.8 million. Most of that is coming from the Center Consortium and the USDC token. We will likely see that interest income number rise in the fourth quarter and could be as much as $400 to $800 million in 2023. Now, this will be a sustainable source of revenue as long as the USDC token is in use and as long as interest rates are high. So while high interest rates may not be good for growth companies like Coinbase and for the crypto market, it is actually good for a product like USDC. Now, a couple of other things to keep an eye on when earnings are reported in a few weeks. Coinbase did reduce its headcount in 2022, so we should start to see some impact on that, but specifically on the operating expense line. Look for that to come down a little bit, put a little bit less pressure on the company's revenue and gross margin. This is also a company that has over $5 billion in cash. So the other thing they watch is the cash burn. How long is Coinbase's runway before it runs out of cash? Over the last few quarters, that runway has been 2 or 3 years. Investors should want to see that extended even further to maybe 3, 4, or 5 years. We simply don't know how long this crypto winter is going to last or what it's going to look like when it ends. So lower cash burn is always good for a company like Coinbase. So to review here, 3 reasons to like Coinbase right now. It's in a much better position from an exchange standpoint after the collapse of one of its biggest competitors, FTX. It's one of the leading staking platforms with about 15% market share. That will be an additional revenue source that starts in the fourth quarter of 2022. And the 50-50 ownership of the Center Consortium, which runs the USDC token, will be a big source of revenue in both the fourth quarter of 2022 and into 2023. I will be covering earnings here when they come out, so keep an eye out for a video there. But let me know what you think about these. Have you looked at these additional revenue sources that are popping up over the last few quarters at Coinbase? I'd be interested to hear in the comment section below. Follow Riiv Investing and give this video a like. Thank you for watching, and I'll see you here next time.